There are those out there that think that the ability to multitask is a good thing. More things can get done, and it's a good use of their time, so they think. Now, I've read research that indicates that while you may get more things completed, they are not completed at a level that compares to just doing one thing. If you believe that if you're going to do something that you should do it to the best of your ability, perhaps multitasking is not for you. Even as some of you read this, you probably have more than one browser open. Perhaps you're glancing at your phone or even reading emails. Technology may be great, but ever see people multitask when out for dinner with someone? I've seen couples and even families eat their food while on their phones, yet don't say a word to each other. Multitasking takes away from one extremely important variable on the quest for success: focus. Now, it doesn't matter if we are talking success at relationships, sports, or doing a mundane task such as washing the dishes. Laser focus on one thing at a time ensures that you are devoting every ounce of brain power and physical ability to the task at hand. This will allow you to complete that task to the best of your current overall ability. So how does this tie into trading? Simple. Let's say you have been working hard at playing failure tests of highs after a market has overextended itself, and you've had some pretty good success in terms of multiple R wins. As a matter of fact, after a learning curve, you are starting to make some really good progress. A, price was running up, breaks out of a channel, puts in a high, and pulls back. B, after a brief pullback, price breaks the previous high, fails to continue, and breaks down. Now you've jumped into a trading webinar, and the person leading the webinar tells you that using a moving average can increase your odds of taking a good trade. You're taught about moving average slopes and how a sideways average can tell you when you're in chop. You decide to implement that into your trading. Now, the trade that was valid before implementing the average is no longer playable. A, only buys are allowed even though prices failed to make a new high after a solid run up and a clear exhaustion was present. And B, valid pullbacks discounted because the moving average has gone sideways. Now you see skip trades and can clearly see that losing your focus on what is a fundamental way markets work has been caused by an extra layer of complication. You change your rule set to accommodate the average and you start to rattle off some good trades. Another guru says that trading the higher time frame trend is the best way to increase the odds of taking a good trade. You're also taught how to use lower highs and lows as the basis for a trend change from an uptrend to a downtrend. It makes sense. You decide to implement that into your trading and you remove the moving average. Now this is the weekly chart to complement the other daily chart. A big run up, a high is put in, but you don't see the pattern that was taught by the guru. There's no trade for you, and the weekly chart does not take out a low until a year after that low was formed. The guru didn't teach you that a candle that I've highlighted here, it's actually a pullback on a lower time frame equaling over 200 pips. And while you miss trades, you do manage to make some good trades over time. But after reading a book about keeping things simple, you decide to go back to your basic system. Your goal of being consistently profitable is an arm's length away, and then you lose focus on what you're doing and you add in different layers of complexity. Your original trading method never let you down and was performing as expected, yet you decide to change it. Worse yet, you start back at zero as you go through the process of mastering each change to your trading system. If you've ever read a book featuring successful people, one thing they speak of is laser focus on one thing. If it proves itself to not be taking them closer to their goals, they discard it. But it proves itself to be ineffective. It's not change simply for change. When NetPicks releases a new trading system, rules and trade plans come with it. These have been back tested, forward tested to ensure that customers are getting a solid system. There are those who think that they can change something about the system, add an indicator or different rules, and when it fails, they blame the original system. The truth is that once you lose focus on the original system and you change something, you can no longer point a finger at the system you bought. It's no longer the same. So keep your focus and perhaps trading success can finally be yours.